Hello everyone, my name is Miniseti. I hope you all are staying healthy. Today we are going to talk about process of capital formation, causes of low capital formation in underdeveloped countries and how to promote capital formation in underdeveloped countries. So what do you mean by capital formation? According to narrow meaning, capital formation only include investment in physical or tangible assets. For example, investment in machine, investment in equipment and a building. But according to broader meaning, capital formation include investment in both physical and human capital. As we know, labor skill and knowledge are also crucial for economic development. Process of creating capital involves three stages: creation of saving, mobilization of saving, and investment of saving. One by one we discuss about each. First stage of capital formation process is creation of saving. Capital of nation depend on ability to save, and ability to save depend on income. When individuals save money, then these fund will available for investor or businesses to invest, and investment eventually increase the rate of capital formation. Second stage is mobilization of saving. For capital formation, saving is not just enough. There should be proper financial institution like banks. But why? Because financial institutions channelize saving from individual to businesses or investor. For example, you deposit your saving in banks. Banks will use this fund for giving loans to investor or businesses. Obviously, when they invest, eventually capital formation will increase. Next stage is investment of saving. Process of capital formation will complete when saving eventually convert into investment. That means in this stage, businesses will purchase capital goods like machinery, equipments or building. Investment can in form of fixed capital or in form of working capital. Now is the causes of low capital formation in underdeveloped countries. Low per capita and national income. Capital formation mainly depend on saving. Saving depend on income. How people can save if there is a low per capita and national income? Underdeveloped countries, people are not able to save because they mainly focus on immediate needs rather than future long-term planning. Lack of investment opportunity, small size of market lead to less demand, and less demand discourage businesses to invest. Lack of demand and supply for capital means fund. There is a lack of fund which are available for investing in capital goods, and there is also lack of demand for capital goods. If businesses are not investing because of a low demand, businesses are not invested, businesses are not doing production. If businesses are not doing production, then how can they do demand for capital goods? How can they do demand for machinery, tools and equipment if they are not doing production? Demographic factor, their population is continuous growing and create obstacles for capital formation. Lack of infrastructure, political instability lead to lack of control, lack of proper rules and regulation which are imposed by government. Corruption have severe impact on underdeveloped country because they already have limited resources. Demonstration effect, that means people of underdeveloped countries follow lifestyles of developed country. That means they purchase goods which are not produced in their own country, they do import. If people of country are doing import, then how capital formation can increase in their own country? How to promote capital formation in underdeveloped countries? Increase the domestic saving. How government can increase domestic saving? Obviously by increasing interest rate. Increase in interest rate will motivate people to save more money. Expansion of banking institution. As we know, financial institution like banks channelize saving from individual to businesses or investor. That's why there should be proper financial institution. Tax policies. Government should impose tax policies that increase saving and reduce irrelevant consumptions. Create favorable investment climate. How government can create a favorable investment climate? Obviously, by removing rules and regulation on businesses and giving them incentive. Develop infrastructure. Infrastructure will also motivate private sector to invest. Support to entrepreneurship. Government should provide support to entrepreneurship, means give them training, resources, investment in education and skill. Human capital, that means labor, skill and knowledge, also very important for capital formation. Sound monetary policy. There should be sound monetary policy, because sound monetary policy ensure price stability and stability in interest rate, and stability in price and interest rate motivate people to invest. Technology, there should be proper technological development for businesses. Collaboration between public and private investment. There should be collaboration between public and private sector, so that their large project can finance. So this is all about capital formation. I think you got it, and thank you so much for watching this video. Bye, take care.